In CBDC, just as paper currency, you go to a bank, let us say you are drawing some 1,000 rupees currency notes. You draw 1,000 rupees, keep it in your purse, you go to a shop, you have to pay 500 rupees, you take out 500 rupees and pay. Here also, you will draw the digital currency and keep it in your wallet, which will be basically your mobile phone. And when you go and make a payment in a shop or to another individual, it will move from your wallet to his wallet. There is no routing or there is no intermediation of the bank.
Hello and welcome to 3.0 TV. I am Manoj Dara. The global financial system is undergoing a major transformation, and the Central Bank Digital Currencies or CBDCs are the key part of this. CBDCs are fast advancing and inevitable innovation likely to influence more larger national economies in the next 12 to 24 months, a report by leading research institute claimed. As their essence, CBDCs are the digital versions of the country's fiat currency that are pegged at 1:1 ratio with the original currency. For example, India announced the release of CBDCs in the form of a digital rupee, which is always equal to its fiat counterpart.
We have already seen many big exchanges falling, FTX being the recent one. So obviously a better and safer asset was needed where people could have same benefits but without such a high risk.
So by definition, CBDCs are recognized as digital legal tender. As a result, CBDCs have the same legal standing as fiat currencies, in contrast to the other digital assets of the similar nature, such as the stable coins. This is significant because the global shift towards cashless society is one of the key forces behind the CBDC's expansion. If we talk about the current economic system, which has had difficulty sustaining regional and the global economies as more countries move towards a cashless economy, CBDCs may have been able to help these problems. However, we have brought up certain issues with the CBDCs in this story, particularly with the underlying technology. So, will CBDCs replace this cash? We will explain this to you. It is important to recognize that CBDCs may not be suitable for all scenarios. In some cases, cash and existing payment systems may be better suited. For example, in a country where existing payment systems are well established, they may be little motivated to adopt a CBDC. In such cases, it may be more beneficial for banks and other players to focus on building out existing payment systems. The technology that underpins CBDCs is still relatively immature.
So one of the major reasons that the central bank will have to work on is the privacy and the security. Though CBDC is based on blockchain technology, high data security needs to be done in order to safeguard the privacy of the end users.
Risk associated with CBDC's technologies, as various stakeholders need to understand the risk and associated with technology and carefully consider all implications of the various models and designs. It is essential to ensure that any CBDC system is secure, resilient, and compliant with the applicable laws and regulation, which is actually the need of the hour. This requires close collaboration between public and private sector players such as central banks, technology companies, and the regulators. It is also important to recognize that CBDCs are only part of a broader digital transformation of the financial system, and it needs to be considered in the context of the other emerging technologies. The technology behind CBDC is still new and evolving, and banks must take abreast of the at least developments and the opportunities in the way forward. This means they need to have an understanding of the underlying blockchain technology as well as the implications of the public-private keys, digital wallets, and the distributed ledger technology. This is something which they have to keep an eye on. Regulating CBDCs, they also need to understand the implication for the financial regulations and compliance and how to ensure that the technology is secure and robust. The technology and the legal framework of CBDCs is also still in its infancy. The bank needs to be aware of the regulations in their own jurisdictions and be ready to adopt their systems and processes to comply with those regulations. They also need to consider how their operations and customers' services will be affected by the introduction of a new type of asset class. Finally, banks need to understand the broader implications of CBDCs and how they will affect other industries and services such as payments, investments, and insurance. they need to look beyond the technology and think about the different ways in which CBDCs could be useful and the potential opportunities they present. So, to sum up, the CBDCs are an emerging technology with the potential to revolutionize the entire financial sector and other industries. Thank you for watching this special story on 3.0 TV. Keep watching us for more such interesting updates. Thank you.